Good afternoon, traders. This is a live trade recap. I took 3 trades this morning right at the market open. I'll tell you right off the bat, the first 2 stopped me out. The third one hit my 2-hour profit target. So theoretically, I am break even on the day, but I'm actually slightly red. I'm not talking about all of this. Most of this is from SPXL. I'll show you exactly what is from the day trading in just a moment. And I also have updated the plan because of some stuff that I noticed today that I've been thinking about for a long time. And today was kind of like a reminder, okay, we need to make these changes to the plan. And it's not, I want to make this perfectly clear, it's not because the first 2 trades failed. You have to be very careful not to change your plan just because of a red trade or a red day or even a red week. Doesn't mean that what you're doing isn't working. So let's just get into the trades and I'll show you exactly what I'm talking about. So at the open, there wasn't a whole lot going on. Macy's was making new highs, but it had not traded above its previous high yet. And SKLZ I have up here, but that was below the 200 MA on the daily chart, so that's why there's no yellow line here. It's just up there because I haven't replaced it with anything, but I'm not actually looking to take a trade on it. So let me just go back it up and I'll show you where I was checking the daily chart. And you're going to see me check my swing trade occasionally. So here's the daily chart on Macy's, and there's the 200 MA line. So we can see the price is trading above the 200 MA. And I like to see that because that tells me that we're in a long-term uptrend. And then INOV was also going up on the screener, and it was up on the 200 MA, but I did not like how it looked on the 5-minute chart where I can see the extended hours. You could see that there's really no trend up. It just kind of gaps up and then goes sideways. Whenever I see that, I just avoid it. Those trades generally never work out. So it's more than likely going to just continue sideways throughout the day. I didn't go back and look at it. I don't really care. It's a good idea as well to not go back and check ticker symbols that you were thinking about trading or that you had up and see what they did, because all that's going to do is torture yourself and going to make you trade emotionally, likely on the next day or the next couple of days and maybe in the long term. So instead of torturing yourself going back and looking at ticker symbols that you might have considered, just accept the choices that you made and record the data. And then again, over time, over 100 trades or more, you'll know whether or not what you're doing is working. And that's really all you need to know. You do not want to mess up your head by going and say, well, what if I traded this? And what if I traded that instead? That's really going to drive you crazy. And it's not going to be helpful. Okay, so here we go. Here is, okay, DLO. This is the trade that I took, and let's take a look at it. So this is the moment that it popped up on my screener, basically. It was around 9:35. I have the screener video as well. I can show you that at the end. It was at the bottom of the first page, but it was still at the first page, and it was up like 30%. So that may have been a red flag, but in the moment, it just looked like it was moving in a very strong upward direction. So it met all of my criteria to look for a trade. It was making new highs versus the previous session, and I never put a yellow line on the chart, but I did check to see the previous high was $63 there. You can see it right there. So I know that it's trading above that high, and now all I need to do is wait for the first pullback to take an entry. And you could see right here, the first pullback was on this red candle, and I missed the entry, but part of my plan says that if I miss the entry, as long as my would-be 2-hour target, as long as my profit target did not get hit, if I would have entered here and my stop loss didn't get hit, then I could still enter the trade on a pullback, obviously. So now I'm just kind of waiting for the price to see if it comes back down to that level, and there it does. So here, let's see, hovering over this candle. So the high of this candle is 64.40. So my ideal entry, if I would have entered for the break of that candle, would have been 64.41. So that's what I'm looking for. I have to see 64.41 or lower in order to take an entry at this point. So there we go, 64.26. You saw that pop up, and then that's when I hit my hotkeys to get in. But this thing ended up being extremely whippy, and you could see I got filled at 64. So this was an extremely volatile stock, and this alludes to some of the changes that I made in the plan, and I'll go over that stuff at the end too. So I have made some changes that should keep me out of a trade like this in the future. at least that's the attempt, and we'll see in the long run if that works or not. I'll show you that at the end, the plan. Let's just stick to going over the trade. So right now I'm looking at where my stop loss should be. It should be at the just below the low of this candle. So the low of the candle 63.60. So I wanted to bring it up to 63.59, but let's watch what happens. So I've just got in the trade. I'm bringing the stop loss up, which is always the first thing I do. Why? Because I don't want to get flushed down and take a bigger loss than I have to. And look what happened. Let's watch this again. So here I'm bringing the stop up, and here comes the price down, and it looks like it stopped me out, but I made a mistake here. I did not let go of the stop loss button. I did not expect that huge flush there to happen so quickly. And that was kind of a wake-up call that, hey, I need to be a little bit more on my toes, because these mid-cap stocks generally are not this volatile. And this was on the high end. Like, I thought later on, maybe this thing was just barely a mid-cap and just came out of that small cap kind of qualification. But I checked on it, and it had like 18.9 billion $18.9 billion market capitalization. So that means that it was on the higher end. It's actually out of the mid-cap range. It's above the mid-cap range. My mid-cap screener I have set to go up to 20 billion. So it was not a small cap. It wasn't even a mid-cap. It was a large cap, but it was moving with extreme volatility. And you see the result of that is that it flushed down below my stop, and now I'm in defense mode, and this is a good thing that you guys get to see this, because what do you do if this happened to you? The only thing you can do is try to chase the price up with your stop loss, because you see luckily when I let it go and he clicked OK there, the stop loss is now below where the current price is trading. So the best thing I could do is try to chase the price up and get stopped out as high as possible so that I decrease my loss. But you don't want to bring the stop right up to where the price is trading, because the order will just get canceled and it will not fill. So you have to kind of, gingerly trace that price up. It's kind of tricky. It's not a great place to be in, but you're doing the best, trying to make the best of a bad situation. So that trade failed. Now my plan says that as soon as that first trade fails, that I have to look for the next entry. I could take up to 3 trades. And once I've lost 3 trades, that's it. But that wasn't the case here. I did win the 3rd trade. So here we're looking for the second trade, the second entry. And of course, hoping that one works out. And then we would be up 1 R on the day if that happened. But unfortunately, that did not happen today. So let's fast forward a little bit. I think it happens pretty quickly. I'm marking out the bottom of the ABCD pattern, so I know if the price keeps coming down, if it goes below that level, then I don't take any trades anymore and I stop trading for the day. That's what I would do in that scenario. But that didn't happen. It's going to give me another entry. Okay, here it is. So you see what happens. This thing flushed down, and now it's working its way back up. So as soon as a 1-minute candle makes a new high, that is my trigger to take an entry. So I'm hovering over this candle right now. The high is 63.35. So my ideal entry would be 63.36, and I need to see that price or better in order to trigger my hotkeys. So let's take a look. It's going to happen in just a second. There we go, 63.36. And then I executed my hotkeys. You could see that a kind of like a watch list thing came up or something, a favorites list came up. So all I do in that scenario is hit my hotkeys again as quickly as possible and hope that I can get the best entry. Sometimes you'll get a little bit lower than your ideal entry. Sometimes you get a little bit higher. So this time I got a little bit higher. I don't think it made any difference because I ended up getting stopped out of this trade. And then the only thing that I was having trouble with on this trade was deciding, do I want my stop at the low of this candle? Really, technically, it should have been probably at the low of this candle, and that would have made the loss quite a bit smaller. But this looked a little bit more like consolidation. I guess it's just really noisy price action. So I did make the stop loss the low of this red candle, tried to give this thing a little more room since it was volatile. That ended up working against me today, and I got stopped out for a much larger loss than I probably would have had about a 30% smaller loss had I had the stop loss at the low of that candle. And that might have been the difference between an actual break-even day. So that's something to keep in mind. But again, I've made some changes already in the plan, which I'll show you, that should keep me out of trades like this in the future. So again, using the 2-hour calculator to get my target, my stop loss. So I got stopped out right there. Sorry, I went right past it. Let's just see that in real time. There we go. And the fills on the stops were really good. Everything was kind of like on the penny, except for that very first one, but that was because of me more than anything else. So now I'm again looking for the third trade. And here it comes. Again, it's when a 1 minute candle makes a new high, as long as point A of the ABCD pattern hasn't been broken, and it hasn't. So I'm hovering over this candle. The high is 62.75, waiting for 62.76 in order to trigger my entry. Why don't I just stop trading now? Because I know my third trade is more likely to work out, and I have a high chance of getting back to break even. Better than 50% chance. Anytime you have a better than 50% chance odds, then you want to take the trade for sure. So here we go. We're looking for 62.76. So there you saw 62.83, and I triggered my hotkeys to get in. And I got, this time the slippage kind of worked against me. I got a lower fill. And what I mean by it worked against me is because this trade worked out. If I would have gotten a higher fill or my ideal entry, then I would have made more money on this trade, and that would have helped offset the loss of the 2 trades. But nothing I can do about it. I did my best to enter at the price that I wanted to get in, and this is where I got filled. This was just a very volatile stock. That's why these fills are so crazy. And again, use the 2-hour calculator. It gives me my profit target. I put it in place, and then I don't worry about the trade. This is my last trade. No matter what happens on this trade, if this trade failed, I'd be done trading for the day. If it works out, I'm also done trading for the day because it was my third trade. And also, once I get a 2-hour trade, I'm all done. So here you're going to see me just minimize the chart view so that I can just focus on this stock, which I could have done that earlier, but it was just too active. There was too much going on. And you can see that Macy's is heading to its previous high, and it may have broken out. It may have given a 2-hour trade. But again, I'm not going to go back and look at that chart, because that's just going to drive me crazy, you know, if that was the case. And here I am taking a loss on these trades. I know what I'm doing works in the long run, and that's all that matters. So there's no reason to bother yourself like that. Make yourself an emotional trader. That's what we're trying to avoid. All right, so now we just let this trade play out. I don't think I even sat here and watched this trade. I just, walked away because I knew everything was all taken care of for me. So no reason to sit here and watch it play out. And let's see what happened. So there I got filled. That's interesting. At 63.95, I think it was. That just goes to show you how crazy this stock was moving, because you could see the candlestick. Either that or it's a glitch with Webull. The candlestick is at 63.78. But the reason why I got filled just means that there was a bid order at that price. And now you can see the price went up to 63.90, it looks like. So anyway, that's that trade. Let's take a look at my trading plan, and I'll show you the update that I made. So here's the update. I'm no longer going to trade stocks above $50 in this plan. Before I was trading the range $5 to $50. Sorry, $5 to $100. But I looked over my spreadsheet, and only 17% of the stocks, only 17% of the trades have been with stocks above $50. So it kind of doesn't make sense to do it because it's not really statistically relevant. Those are very few trades. So if I just wipe out those trades from my plan, then I'm going to be trading stocks in a price range that is more common to my strategy, if that makes sense. So anyway, it's a statistical thing. It'll help with the statistics, and anytime you could do that, you're going to help your trading. So the other thing is, I'm no longer going to trade stocks that do not have a 200 MA line on the daily chart. And before this, I used to say, okay, if there's not a 200 MA, I just want to see an upward trend on the daily chart, and then it meets my criteria. But this has happened a few times now when I've traded these stocks that don't have a 200 MA. They're less predictable, and that makes sense because they don't have a history. So you're not going to have as many traders, I would say, like disciplined professional traders, retail traders that have been doing this for a long time that are profitable. You're not going to have those kind of people trading those stocks because they're looking for something that's more predictable, that has history. So that makes sense that if you're trading something that doesn't have a 200 MA line on the daily chart, that the patterns are not going to be as reliable. Simple as that. So why would I want to trade something like that? So that's why I put that in the plan. And let's take a look at the spreadsheet now. I entered those trades in, and they're not going to be counted as like error trades or anything like that because they were according to my plan up until after I was done trading. So here's those trades, DLO on all 3 trades. And you can see the third trade worked out, so we were able to make a little bit of our money back. And that's it. But because of the slippage, the risk was quite a bit higher on the first 2 trades than it was on the last trade. So that's why it still cost me a little bit of money, even though that third trade worked out. So that's pretty much it. I've showed you the plan. I showed you the spreadsheet. Let's look at some of the data down here. So the average of all of my trade days, the win rate is 50% basically. But of actual trades, including error trades and all that kind of stuff, it's just under 40%. Without errors, it's almost 45. And then the average of those two, which is more realistic of the long-term win rate, is 42%. And remember that a 40% win rate with all or nothing 2R trading is extremely profitable. I always like to share this example with you. If you have a 40% win rate after 10 trades, then you're up 2R. After 100 trades, you're up 20R. After 1,000 trades, you're up 200R. So that is very important. And that's why collecting data and analyzing your data is also extremely important. If you just ran like one calculation and found out what your win rate is, it could be totally meaningless, and it could tell you that, oh, that's really low. It's not going to be making me money. In actuality, it is. So win rate, if I only took 3 trades from the very beginning, 43.55. And here's our R value. If I only took 3 trades from the beginning, I'd be up 19R. I'm actually up 12R, which is still good. And the win rate on the first trade is pretty low, but again, this is better than break even. 33% is break even, so that's still a profitable trade. And you can see that over here in this column because I add up all of my 2R trades versus my minus 1R trades, and you can see that I'm still up 3 times my risk on the first trade. I'm up 9 times my risk on the second trade, and I'm up 7 times my risk on the third trade, even though that has the higher win rate. It's because I haven't taken as many third trades. So that shows you how the win rate, it takes time for it to actually make a difference on your profitability. So the win rate of the second trade is 47%, and the win rate of the third trade is about 55%. So that's that. I think that's pretty much everything. And I was able to add a little bit more data here, but we still need more. These numbers are really low to make any real conclusions, but this is going to be a really interesting piece of analysis once we have more data to enter into it. So anyway, no matter whatever trade you're taking, whether it's a day trade, a swing trade, an investment, make sure that you have a plan going into that trade. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.